How much tax do you pay as a self-employed person? Well, that's a great question, and it's something that we've done to help you by building this calculator. So go check out how much tax you'll be paying as well as national insurance. Hi everyone, my name is Simon Misiewicz from Optimize Accountants, and in this video we're going to be talking about the self-employed. Self-employed people that need to fill in a self-assessment tax return will know that you have to pay income tax. But did you also know that you have to pay National Insurance Contributions Class 2 and National Insurance Contributions Class 4 as well? Well, you do now. And we're going to help you understand how much tax you have to pay, as well as this additional stealth tax called National Insurance. There is a video URL, so if you want to get to this page and the calculator, check out the URL in this video, but there is also a link in the video description box, so feel free just to click on that to make your life easier. Now, what I've done for you here is described what the UK tax calculator is. On the right hand side, interesting enough, there's a bunch of other tax calculators that you might find useful, so go ahead and check those out. Scrolling down, you'll see the calculator, but before I do, I want to talk about who should use the free online self-assessment tax calculator, and then the use of a limited company. And we'll talk about that in a little bit later, but I do want to bring this to your attention in terms of the discussions we have, plus the first £1,000 worth of profits you make in your self-employment will be tax deductible, as in you do not pay tax. So as long as you earn up to £1,000 in self-employment, that will not be subject to UK tax by HMRC. Let's move back to the self-employment tax calculator, which is here. So what I'm going to assume here is that someone is going to be earning £20,000. It doesn't matter what type of trade or anything, it's more to do with how much tax will you pay on self-employment pages in your self-assessment tax return to HMRC. So 20,000 here. Now I've put in here straight away a personal allowance of 12,570. That will change over time. We'll automatically change that. So depending on which tax year you're looking at, this will be changed for you. The tax rate for that is 0%, so that's why it's 0. And then we've got the taxable profit of 7,430. Someone earning 7,430 and just has that self-employment income will be subject to 20% tax. Again, we will change these over time. And then on the right hand side, you can see how much tax that you'll be paying, which is the 1486. The one thing that to bring to attention is you don't just pay the income tax. No. HMRC also charge you on the class 2 national insurance as well. So you got £52, which is £2 per week. Now that might be different. You might be doing part year. We've just assumed a full year here, but that might change. And you've also got the class 4 tax, national insurance tax as well, which you can see is banded there to come back to £20,000. So in total, this person, based on £20,000, will pay around about £2,670, and the percentage of tax on their income is 13%. Now, straight away, I want to bring to your attention here, well, 13% is much less than UK corporation tax, so it wouldn't make sense for this person to use their limited company, and mainly because of their personal allowance. If they are just getting self-employment income, no other form of income, then they would get 12,570, which you do not get in a limited company. There is no personal allowance for a company. So why would you use a company in this perspective? Well, the only other reason other than tax, of course, is risk. Someone suing you in your personal name means that all your assets could be subject to a legal battle, and your assets, your personal assets, could be taken away from you to give back to the person suing you in the form of compensation. Now, let's just have a look at another scenario. Let's imagine now that we've got the same person who has a job paying £30,000 worth of income and £20,000 worth of self-employment income. One thing you'll see is that the personal allowance is not going to be taken into account, and the reason for that is that 12,570 would be utilized in their other forms of income, which could be, as we said, employment. So therefore, the £20,000 would be subject to UK tax on their self-assessment profits or self-employment profits, which £20,000 at 20% is 4,000. Again, if we look down at the bottom, now they've got the total tax and national insurance of £5,000. The percentage of tax and NIC of their income is now 25%. At that point, you might think about using a limited company, because a UK limited company up to £50,000 for period after April 2023 will be subject to 19%. After that, April 2023, of course, then we've got an effective rate of 26.5% corporation tax, which then goes down to 25%. But nevertheless, if you've got a side gig going on, is it better for you to have that in a limited company? That's for you to discuss with your accountant and to see if it makes sense. Just doing one other form, let's imagine you've got someone earning £60,000 and they've got £30,000 worth of profits. What happens with that? So straight away, what you'll see is that that person now is going to be subject to 40% tax on their self-employment income. Why is that? Well, everyone is allowed up to a circa £50,000 before they hit the high rate tax band. But this person's got a job of £60,000, so all of that allowance has been used, the basic rate tax band, the personal allowance has been used as for their employment income. So therefore, all of the £30,000 would be subject to the 40% tax band, which is £12,000. If we go down further, we have now got self-employment tax to think about for national insurance, which you can see the bands there, 9% and 2% plus the £52, which in this case, this person has now got an income tax liability and national insurance class 2, class 4 of 13,400, near enough, which is 47%. So for this person, it makes a lot more sense to use a limited company if they do not need all of the money and happy to keep that money in the limited company. So hopefully this gives you some guidance of making some really effective tax planning plans for you, your family, your business partners when you set up your business, or indeed have a tax review for your self-employment.